or just make me excellent. Thank you so much. Thank you. Okay. So just try and also make me the co-host. You'll find my name. Just make me co-host. Okay. Okay. So here we have to do what? Government can be more expansionary if it's increasing expenditure and less expansionary if it's reducing expenditure. So here in your own ways, how do you, okay, put the two together to provide a high-level summary on the credibility of the budget? So to you, is the budget credible or not based on whatever that you are discussing? In terms of the revenue side, yes, government is increasing revenue. Tax buoyancy is also not significantly different from historical trend, but nonetheless, key questions needs to be asked about how government is raising those taxes, whether government will plug in their loopholes, whether e-levy can rake in the revenue that government is actually looking forward to getting, whether digitization can also be used to plug in loopholes, whether we can be more, charitable in paying or responsible in paying our taxes, which means that whether we have more tax morale, okay. And then the expenditure side, we can also talk about the government not respecting the IMF condition, even though it is under the IMF program, okay. And we can also talk about the various expenditures. They are actually, increasing. So when you put everything together, will you be saying the government budget is actually credible or what, or not credible? So overall, you can see the budget is quite credible, because on the expenditures, on the revenue side is higher. You can get more revenue, and then based on the questions that government will provide responses to, that will also deepen. That will also tell us whether the budget is actually more credible or less credible. So here you argue your own position based on this. Any question? Any question? Okay. So let's proceed to the.
Doc,
yes.
If you add individually, you expect that we advance our argument. Our argument should be different.
Oh yes, that's what I'm saying. Collusion in an exam is frowned upon. So in this particular one, I don't expect you to produce the same answers.
And every answer can be more correct.
Yes, every answer can be more correct. Yes, depending on how you argue it. Yes, that's what in your own opinion.
Okay.
But if the tax buoyancy, for instance, is 1.44, and then you tell it's significantly higher than, so for that matter, the budget is less credible, you need to explain why.
Okay.
Okay. Okay. So now let's go to the other part.
Hello,
Let me
Doc.
stop sharing and then start
Hello,
sharing
Doc.
the thing. Yes, please, I'm listening.
Just want to withdraw you a little bit backwards. With regards.
Yes, go ahead. Yes.
Doc, I think it's off.
I think his network has been off.
Okay. So we can proceed.
But then, Doc, please, can we go through the question one, especially the
No,
part?
I will not. So let's proceed.
Hello, Doc.
Let's proceed.
Hello, Doc.
Yes.
Please, I said with regards to the seigniorage, I wanted to know, are there regulations regarding how much money can be printed?
Oh yes, there
by
should be
the central bank.
Yes, there should be regulation. We have before government prints, the government need to seek parliamentary approval. But in some of the cases, they print and they hide. You only know that they have printed when you look at Bank of Ghana financial statements. That you know they printed this. Recently, Atuforsen raised issue about government printing, is it 40 billion or 80 billion Ghana cedis, which they didn't seek parliamentary approval. So those are the things. Yes, there should be regulations. Otherwise, when we all become presidents or governor, we will printing money and chopping. Your cost rate will go and print. Say, oh, you just wake up tomorrow and say, go and where's the governor, Bank of Ghana, go and print 10 billion. Then they will give you the seigniorage, and then you chop and say you have used it to support the budget. Okay. Now let's
thank you.
What happened to the printed money?
Is it only the
Oh
salary?
no, it's the printed money. They push it to the economy. Have you ever? They withdraw the old ones. They withdraw the old ones in sequence and then inject the new ones into the system. So when you go to the ATM machines, they will be withdrawing. When you withdraw, you will get new notes. So when you go to ATM, you are finding new notes. It means they are secretly printing money, and they withdraw the old ones. So that is how they inject it. They provide the new ones to the bank, to all the banks, and then tell them to withdraw the old notes. So when you go and deposit your money with the old notes, then in taking the new one, in taking back or in giving you money, when you go to withdraw, then they are new notes. Those are the new notes that they have printed, and they have chopped the seniorage. Okay, so let's make progress. Now let's look at issues of fiscal sustainability and debt sustainability analysis. Remember, if government is running fiscal deficit, we said in the below the line items, government can do what? Government can borrow. But you need to know that borrowing increases your debts, which raises some debt sustainability concerns. Are we together? Now, in this particular case, we are talking about what? Your debt should be highly sustainable. Yes, you can. It's not always bad to borrow. It is always bad to borrow if the expenditure that you are using the borrowed funds to do cannot pay for itself. Which means that if you are borrowing to just consume, then borrowing can be bad. Yes, accumulating debts as a country is not always a bad idea. It is the returns on that particular debt that is a bad idea. It is the returns that you are going to get in terms of the interest rate. In other words, the returns on those particular investment that you are using the borrowed funds for should be higher enough to pay the loan. In other words, the returns rate should be higher than the interest rate. Should be higher than the interest rate. Now we have what is called and your debt should be highly sustainable. Okay, now and stable for you to be able to stabilize your debt. Okay, you need to make sure you have what is called the debt stabilizing primary balance. And the debt stabilizing primary balance is basically talking about what? How much of your primary balance, okay, that you should maintain in order to maintain a constant debt over time. And the primary balance, remember, we are saying is much more like the overall balance or the fiscal deficit of the fiscal surplus. So it is the balance that you are looking at, okay, that you should maintain to be able to do what? To maintain a constant, debt growth. And by looking at the constant, the debt stabilizing primary balances here, we are looking at what the interest growth rate differential all over 1 plus G times your previous debt stock. This particular, formula, what you are seeing gives you the indication of the amount of primary balance that you should have in order to maintain a very stable debt so that your debt will not grow overboard, okay, leading to unsustainability debt. Now, when is debt unsustainable? Now, debt is said to be unsustainable when the primary balance that you need to stabilize your debt cannot be achieved, irrespective under realistic assumptions, okay, politically or economically. Remember, if you are going to constrain your expenditure or your revenue or whatever, and it will raise economic concerns, it will raise political concerns, okay, and it will still follow the role over risk, and it will not jeopardize your growth trajectory as a country, then it means your debt is what is sustainable. However, if what you need to do in terms of your expenditure side or in terms of your revenue side, if what you need to do cannot be done under realistic terms, without raising economic or political concerns, without jeopardizing your future growth or your potential growth, or without jeopardizing your rollover risk, then it means your debt is what is unsustainable. It means your debt is what is unsustainable. So if you don't have to do debt restructuring, if you don't have to, give people the haircuts, if you don't have to significantly reduce expenditure, okay, for you to bring back debt to sustainable path, to bring back debt to, a constant growth path, okay, then it means your debt is sustainable. However, if you have to do something that is economically not feasible, at least, it means that your debt is what is highly unsustainable, because under normal circumstance, whatever solution that should be done to manage the debt, you cannot do it under any circumstances. It means your debt is what is not sustainable. It means your debt is not sustainable. And if your debt is not sustainable, it means that you are not, you will have the high chances of you not meeting your what, your current and future financial obligations. So it is always important for countries to conduct their sustainability analysis, okay, to be able to know the state of their debts and to know whether their debt is sustainable or not. To also know whether they are at high risk of debt distress, whether they are low risk of debt distress, or whether they are moderate risk of debt distress, or in fact, whether they are actually in debt distress. In the case of Ghana, we are in debt distress. Both our external debt that we have borrowed externally is in distress. Our overall public debt, that is for domestic and then the external, which will give the overall public debt, is also in distress. Okay. So now, how much you will actually spend today, or how much you will bring in revenue today, that is the fiscal policy, will determine how much you will be borrowing tomorrow. Because, investors will look at, the future to making this decision whether to lend you money or not. Because if you are going to borrow, you flout treasury bills or you go to international capital markets to borrow. And they look at all those things. Okay. And they also base it on to look at what the debt sustainability analysis, because it is an excellent analysis that is used to determine the future growth of debts of the country and to determine people's risk appetite, okay, or financial condition of the country. If the country is overly indebted to several countries, some investors may not lend to the government. We assess the debt sustainability analysis using the low income debt sustainability framework, which is used to assess the debt vulnerabilities. Okay, and this tool, later we will talk about that, is a tool that was designed in 2017 and implemented in 2018 by both the World Bank and the IMF. Now we have two frameworks that are used to assess a country's debt sustainability. Now we have the debt sustainability analysis, okay, and then the framework. We use the framework, okay, to do the analysis. So we have 9 steps that we follow, right from having a complete data, knowing the various data sources, doing the stress testing, using judgment, and the rest. Now, those two frameworks are, one, we have the frameworks that we use to assess debt for low-income countries, and we have framework that we use to assess debt for emerging markets, economies. Now, the one that we know that is used to assess low-income countries, like in Ghana, we call it the DSF. That's the low-income, the debt sustainability framework for low-income countries. And this is a tool that was developed by the IMF and the World Bank. At the moment, it's currently undergoing through some review to change certain components and know which one is working and which one is not really working. And it's used for those incomes that actually get their financing in large concessionary terms, like getting loans from IMF, from the World Bank. Largely, these loans are in concessionary terms. They are not at the market terms. So the interest rates are, for these particular loans, the concessionary loans, are lower, and they have longer grace period, and they also have longer maturity period. So government can go to World Bank or IMF and borrow, maybe say $150 million, and then they'll give government grace period of 5 years. After the 5 years, you begin to service that debt over a 30-year period. No private investor will give you that good deal. Okay. Now the second one is for it's called the sovereign risk and debt sustainability framework for market access countries. And these are countries that actually are getting they can tap into the international capital market at sustained and large in durable times. At any time they want, they can go to international capital markets to borrow. So for them, they have a different framework that is used to assess the, hey, Isaac, why did you take control of the? Okay, let's proceed. Now, here, like I mentioned, we use the Lake DSF. Isaac. Now okay, let's proceed. I'm not the host. I could have done something about this. Okay, so now let's look at the Lake DSF. This one is used for countries that do what? That borrow in concessionary terms, but the market, the second one, which is the sovereign risk debt sustainability framework for market access country, which is the MAC. It's used to assess the debt sustainability analysis of countries, which has what? Large access to international capital markets on durable and substantial basis. They can go and borrow at any time from the international capital market. Now Ghana cannot go and borrow because the market has shut down on us because of debt related issues. Okay. Now, if you cannot actually do anything with regards to your borrowings and the rest, with regard to your debt, and you run into unsustainable debts, you run into debts, problems like how we are in Ghana, then one key way of dealing with the debt or treating the debt is to do the debt restructuring. And why do you have to do the debt restructuring? We do the debt restructuring because we want to control our debts. And how do we resolve? Because we want to control our debts and because we are in debt distress. So how do we do that? Now, we have an orthodox ways of resolving your debt distress. I'll just talk about the first one. Now, maybe the first one is basically growing above the interest rate. Remember from the fiscal, from the debt stabilizing primary balance, this formula, the first part, R minus G, is the interest rate minus what? The growth rate. Here, you should grow enough so that your growth rate will be able to pay the interest on that part, on the interest on your loans. The growth rate is used to proxy the returns on your investment. So here, one orthodox or one default way of actually controlling your debt and then running out of debt distress is for you to grow above the interest rate. That is, you have to grow the economy to be able to mobilize resources to pay for those debts. The second one is to raise your taxes or lower your spending. In this particular case, you are lowering your overall balance or your fiscal deficit. Remember, from the budget, you can do that. The third one that you can also use is to privatize some public corporations. For instance, COCOBOD, they contribute a lot to Ghana's debt because they go and borrow a lot. And in fact, government had a tough time convincing the IMF that COCOBOD loans was COCOBOD loans, not government loan, which is not true. Because COCOBOD is a sovereign, entity. It is a state-owned enterprise, the SOE. So their liabilities are potential contingent liabilities for government. When COCOBOD runs into trouble, government will have to step in to bail them. So COCOBOD loans are not, they are what is the name? They are part of government loans. Okay, but previously government wasn't including COCOBOD loans as part of government debt. Government wasn't including COCOBOD loans as part of government debt. But when they run into problem, you will come and bail them. So their loans are also your loans. And people also make the argument that government will go and COCOBOD will go and borrow, and government will go backdoor and take the money from COCOBOD and spend. But government would push COCOBOD to borrow and then they take. But they will say, oh, when it comes to the debt sustainability analysis, our debt is low. Meanwhile, COCOBOD loans and those other big tall loans, they are not part of government loans. It should be part because they are government entities. So because of that, our debts were actually lower. They were artificially lower because we didn't have a complete, coverage of our debt. So when we're going to the IMF program, the IMF reported different debts. Government also reported relatively lower different debt than what IMF had. So they had a tough time to actually negotiate because of the differences in the debt coverage. At the end of the day, IMF convinced, and at the end of the day, government understood the need to include COCOBOD, TOR, and other state-owned enterprises debt into the overall our general government debt. And because of that, our debt went overboard to over 100%, to over 100%. And because government is now including Cocoa Board loans and others as part of the government debt, you will now find our finance minister, you will now find our governor of the Bank of Ghana now sitting in as members of the Cocoa Board, So they are now members of Cocoa Board board, but previously they weren't. Okay, so government can privatize those state-owned enterprises to be able to defray some of the debt. Unorthodox ways, unexpected inflation, and the rest. When inflation is high, it increases GDP because the market value of goods and services is what? The price of the good times Q, where Q is the amount of production that you make. So if Q is higher, if P, which is prices, are higher, it means artificially your GDP can be high. So NPP can say we have higher GDP, where we develop the economy more than the previous government. Yes, but it may be driven by inflation. It's just because prices of goods and services are higher, so that the market value will be higher, then the GDP will be higher. It doesn't mean you've actually produced more than the previous government. It basically means your inflation is higher, which is driving up your overall GDP. And once the overall GDP is higher, then your debt to GDP ratio will be lower. So which means that government can intentionally cause inflation, raising the GDP to reduce their debts to GDP ratios. It is an unorthodox way of reducing or moving out of your debt distress situation. So you see government, the Bank of Ghana not doing well when it comes to reducing inflation and the rest. And you would know previously, when the government was going through the IMF loan, the negotiation and the rest, our inflation was somewhere 50-something%. It was one way. And the government didn't do anything. The Bank of Ghana would come and look at the policy rates and the rest, but you weren't seeing anything feasible in terms of its reduction. It was rather doing what? Increasing. Once it is increasing, your GDP is higher. So people will think you are growing as an economy, but because it is inflation, which is increasing the market value. And once GDP is higher, your debt to GDP ratio will be low. So you will tell IMF, oh, we have lower debt to GDP ratio. So give us this IMF program of 3 billion. Initially, we wanted 1.5 billion on the Republic Day, 6th July, when we approached IMF. But now, no, let's look at, give us times it, multiply by 2, give us 3 billion, because our debt to GDP is now what? Lower. No, because your inflation is higher. And also because you've not included the debt of the state-owned enterprises. So you can leave inflation to be very high, and it will create an artificial impression that your debt to GDP is low. And that has always been the case of Ghana. Okay. Now, the second one is also to look at issues on the maybe financial repression, but my key focus is on debt default and debt restructuring. You can default on your debts, and then you have to teach your debt, which is what? Doing the debt restructuring. So by defaulting on your debt means you are no longer able to do what? To pay the debt obligation. So you approach your creditors and tell them, look, I've thrown in the towel. Let's sit down and discuss. Now, for each of these approaches, like inflation, financial repression, debt default, they all have their implications to the economy, political, and social implications, and it all has its costs and benefits. Okay, but mostly debt default, not paying your debt, and debt destruction are the last resort. No country would want to restructure their debt unless they have no option to do. They have managed the economy in a way that they can no longer sustain the debt. So they just throw in the towel and say, look, Maemre, Mumbwe, help us with there is nothing that we can do. You approach your creditors with clean. Excellent. Good. So let me share it. Okay. Excellent. So when you are restructuring, you have set when you default on your debt, there is always consequences. One, you will be excluded from the international capital market. When you run into debt problems and you are defaulting on your debt, they will just remove you, like how they have removed Ghana from the international capital market. They have just uprooted us from the market like cassava. So you cannot go and borrow again. But previously, the government would go and borrow and come, we are doing smart borrowing. You guys didn't know what was happening. Now look at the consequences. Even one city you can't get from the international capital market. There will be reduction in trade volumes. So of course, you would definitely be engaging in the, experiencing negative trade balances. People will run away with their foreign direct investment and the rest. And of course, the larger thing is that your reputation as a country will be at stake. IMF, World Bank, they no longer view you guys to be credible because you defaulting your debts and you are causing a lot of problems. Now, let's look at this issue on the debt restructure. So we have the domestic ones, and then we also have the external ones. So you can restructure domestically by looking at only your domestic debtors, okay, or your domestic creditors. You can also restructure externally by looking at your external or your foreign creditors, okay? Because remember, initially we said in terms of borrowing, you borrow domestically or you borrow externally. So if you are going to restructure, you look at whether you are going to restructure only domestic restructuring or external restructuring. You both have their advantages and their disadvantages. Remember, domestically you restructuring you in local currency, and then you have your local laws, which you can easily change. But for external, it is difficult because one, the creditor composition is very complex. You are dealing with China, you are dealing with Japan, you are dealing with the Paris Club, you are dealing with, with Kuwait. All the creditors that you have dealt with outside the four walls of the country, they will come as part of the creditor committees, which we will be talking about later. Okay, so restructuring, yes, you have to do restructuring, which is also a different ball game together. So what are the processes when a typical government is restructuring the debt? Now there are five processes. Now one, the first step is to get the players involved. Okay, and the second step is to look at what the data reconciliation. Here we are talking about the debt data. Then the third one, we are looking at the restructuring envelope. Which part of the debt are you restructuring? Domestic debt, external debt, and then what are the parameters are you looking at? Then you go into the negotiation process, and then there's also a possibility of creditor holdout problem, and then the threat of litigation, and then also getting the deal signed. Okay, now let's look at this. In terms of the first part, which is the players. The players here, we are looking at the sovereign, let me see. We are looking at in terms of the players, we are looking at the sovereign data. And the sovereign data, that is the key player. That is the country. You are the data. So one, the sovereign data, you need to accept the fact that you are in debt distress and then approach your creditors for the restructuring. So now it may take very long decision for you to do what? To accept the fact that you are in distress and then approach your creditors for that particular bill. So you as a debt restructuring starts from you. You as a country, you need to acknowledge that you are in distress, and then you begin to do what? To start looking at debt restructuring issues. Okay. And when it's debt restructuring, you also need to find out whether you need solvency bailout or you need liquidity. And then you also need to also know that there can be issues around legal litigations, okay, or some hostile creditor actions. Some creditors may be very angry and they wouldn't want to participate. I know in the case of Ghana, Afreximbank didn't want to participate in the debt restructuring and they vehemently refused. So they were excluded from it. Domestic debt too, pensioners, individual, we form the individual bondholders with placard and saying we don't want to be part of it, whatever. So those are some of the things that the government should be talking about, the government will be dealing with. These are called the creditor holdout problem. So later we will be talking about that later. So first, the government is the key, stakeholder or player in the debt restructuring. And like I said, the debt restructuring starts from the government, who is the debtor. The government also comes with the list of advisors. So you will find government of Ghana having a lot of advisors. In fact, we have for the past previous loans that we've been going to borrow, we've always had 3 advisors. And the last one, we had 4 advisors. We have a Fidelity Bank was an advisor, to the government in borrowing. And then, of course, you all know, what is the name? Data Bank was also a government advisor, of government loans, okay? So anytime you go to borrow, those advisors will rake in huge sums of money as fees. And when you are going to restructure, they would also be part of the restructuring process to advise you and also rake in some additional money, okay? I'm not talking about issues on conflict of interest, the Minister of Finance also being the owner of the, the data bank, whether it's really, whether it wouldn't amount to conflict of interest. But what I'm trying to say is, it's not only the government who is key in the restructuring process, the advisors are also key, because they help in designing and negotiating the restructuring process. They also help in looking at the restructuring parameters, and they also help in analyzing the economic and financial situation of the country by looking at the available data, reconciling all the necessary debt. And once that is done, the government, a key, stakeholder is also the creditors. So the creditors are also key players. And then we are talking about the multilateral creditors, like the IMF, the World Bank, African Development Bank, Afrexim Bank, ASEAN Development Bank. Those are the multilateral creditors. And then we have the official creditors, okay? And those official bilateral creditors, we are talking of the countries that you go to borrow from: China, France, Germany. So for the country, we have the Paris Club and we have the non-Paris Club. So those are bilateral creditors. Ghana can go to China and borrow from them, and we have a lot. And China holds a lot of our debts. Okay, we hold a lot of our debts to China, which is a non-Paris Club. So the second category is also the commercial creditors. And for commercial creditors, these are commercial banks, the bondholders, and the rest. We go to them and also borrow money. We go to them and borrow money. Okay. So creditors are also key players in the debt restructuring process. Now, what is the second one? And they all have their own all aims, the aims and objectives, okay? What they want to earn to get out of the restructuring process. Now let's look at the second stage. The second stage is talking about the debt reconciliation. Now, yes, I'm in debt distress. I have to be very open and transparent with regard to the debts that I owe. So Ghana will approach the creditors and say, look, I'm in distress. I need help with the debt restructuring. So as a creditor, you need to know how much the country owes to all the other creditors. So Ghana will go to China and say, okay, fine, I owe 7 billion to China, to World Bank. I owe 11 billion to US. I owe 7 billion to Kuwait. I own domestically, I own maybe 72 billion to my domestic debtors. I own maybe 82 billion to this particular country. So you have to give a complete and transparent data on your debt situation, including your current financial situation and your economic situation. My current debt level is this one, my growth rate is this, interest is this is our exchange rate, this is our inflation. You need to give all those details so that creditors would have complete picture of your situation to be able to help you. You don't go to a doctor with a sickness and hide the sickness. If you go to a doctor for the doctor to remove your hernia, you have to remove the hernia and show to the doctor so that he will know the extent of the incision to do and the drainage, how they are going to remove the hernia. So you don't go and then hide certain things. No. So the debt reconciliations will now be used as a yardstick to engage. So once you are transparent with all the data, they are recorded correctly and everything. Remember, it can take long time for this to be done because it has to reconcile. All the creditors must agree. Oh, China, you owe this to Ghana. Oh, France. Oh, so Ghana says they owe this to you. Is it true? Oh, Japan, Ghana says they owe this to you. Is it true? They have to reconcile the data so that they all know how much it owns to the country, given their economic and financial situation. And now they have to now come and do the restructuring parameters. Having known this, We now know how much is owed to domestic debtors. We now know how much it is owed to what private external creditors. So what is going to be the restructuring envelope? Are we restructuring domestic debt? Are you going to restructure external debt? The government can restructure only external debt and say, look, it will be difficult for me to restructure domestic debt because of our current situation. We have a lot of domestic bondholders, people are struggling. So please, I would not touch domestic debt. I will only restructure external debt. Then external creditors will talk if now, if you are restructuring, are you looking at the duration, the maturity? Should we extend the maturity for you? Should we reduce the interest rate for you? Should we reduce the principal? If the principal is reduced, it means that you are giving us haircuts, okay? Or you need a combination of all. So these are the restructuring envelope that will be discussed at the table, okay? Now, the creditors will form what is called the creditor committee, the official creditor committee, and then they will have to nominate, someone to chair it. And I don't know whether later this slide will have it. But once you approach the creditors and tell them, write formally to your creditors that I want to restructure, listen all the creditors, then the creditor will also meet with their advisors, okay, and then form what is called the OCC, which is the Official Creditor Committee. So it is a committee of all your creditors. So they will meet and also appoint a chair. Who can tell me who was Ghana's chair? Which country was Ghana's chair in our restructuring process? And take 5 months. Who can tell me? Okay, so go and look at, go and know, because this is coming in the exam. So they will form the OCC, the Official Creditor Committee, and then nominate a chair. This can also take time. Now, typically IMF and other multilateral like IMF, World Bank, their debts are normally not part of the table. So they don't get their debt restructured because their debts are largely concessionary. So you only restructure the market or the commercial the commercial credit or debts owned to commercial creditors, like the bilateral loans. And these debts owned to commercial creditors are those loans that are given to you at market terms. So the interest rates remain high and then they have shorter maturity period. So you restructure those with shorter maturity period and extend the maturity period. And you tell her, okay, fine, I cannot pay you within 5 years. Let me extend it to 10 years. And even the interest rates, yes, the current 7% I'm paying is too much. Let me do 5.5. Then what is the name? Then you do the negotiations. Okay. Now let's proceed. Once you outline the restructuring parameters or the restructuring envelope, it gives the opportunity to the next stage, which is what the negotiation process. So you have the countries with the advisors. You also have the creditors with the advisors, and they do what is called the restructuring negotiation process. So we have the indicative restructuring proposals, and this restructuring proposal will talk about the total amount of debt that the sovereign that the country is seeking. Yes,
Doc.
yes,
I think I'm ready for the 5 marks now.
No, you just Google it. Let's proceed. Okay. So you just Google it. You just Google it. So, okay, let's proceed. So which country?
It was co-chaired by China and France.
Excellent. Thank you. Yeah, because we owe a lot of money to China as a non-Paris Club member, and then to France as a Paris Club member. That is good. Okay, so we have the indicative restructuring proposal. So the Ghana government will produce the indicative restructuring proposals, and then this proposal will define how much debt relief I'm seeking to restructure. What will be the terms? Are you getting it? So I want to restructure $7 billion of my loan. What will be the contractual terms? One, I want you to reduce the interest rates. I also want you to increase the maturity period so that I don't use small time period to pay you. I also want you to reduce the present value of of the debt. What does that mean? I borrowed 10 billion. I borrowed 5 billion from you, so I will pay the interest on 5 billion. I will tell you to reduce the principal, which means that instead of you saying you borrowed 5 billion to me, let's just say you borrowed 4.5. So I'm knocking out 500 million. So now the new interest, so I'm doing savings. One, I'm reducing the value, how much I initially borrowed, which means that I'm giving you a haircut, okay? Because you are no longer getting how much you had initially borrowed to me. That is one. Two, you are no longer also going to get the interest rate that I'm giving you, even if the interest rate remains the same. Because if the interest rate is applied on the principal, even if the interest rate remains the same, because the principal is now lower on account of the haircut, the interest payment will be low because the principal that will be multiplying by the interest rate will be low. Okay. Government may not stop there. It will further want to reduce the debt by even decreasing the interest rate. And then telling you that one, I'm reducing the principal of the amount I borrowed. I also want to reduce the interest rate. And I now want a longer period to be able to do what? To pay the debt. Please note, restructuring it's not the solution to your debt problems, because no matter what, you will still have to pay those particular debts. So yes, you can get haircuts, you can give haircuts, reduce debt. Ghana, the haircut we gave was what? Who can tell me? It's 30-something%. I don't want to mention, but go and look at it. We gave debtors our external creditors accepted a haircut of 30-something%. Go and look at it. So those are the indicative restructuring proposals. Okay, so it will form the basis for the official creditor committee to then meet and then discuss how much their debt, which is Ghana, is proposing. So they negotiate the process, they look at the losses that they will be exposed to as creditors, and they also look at the gains that they will be getting, because they are better off negotiating the deal than letting the country default. Because if you don't negotiate, the country is going to default and they will not be able to pay, and you can't do nothing to them apart from taking them to court. So you are also better off accepting to do what? To join the restructuring process. Okay. So like I mentioned, you have these guys will meet and the rest. So in the restructuring process, government will also offer carrots and sticks. And this comes in the negotiation process. What does that mean? This is the indicative proposals I'm giving. I want a total debt relief of this $1 billion, increasing the terms of the maturity period, one, reducing interest rates and reducing the principal and the rest. And as part of it, government will need to encourage participation in the debt restructuring. And by encouraging participation, government would have to offer sticks and carrots. We call it sticks and carrots because they are used to exert influence, okay? Or they are used to influence participation in the debt restructuring process, because not all the creditors would want to participate in the debt restructuring. So government would have to entice them to do what? To participate by giving carrots. So the carrots are the positive things that government will do to the creditors to encourage them to take part in the debt restructuring. One, government can give direct cash to people and say, okay, fine, if you participate, this is the amount of cash that I can give you. If you also participate, these are the additional contractual agreements that you are going to get. Or there are some credit enhancement packages that I can also give you. Or there are some value recovery instruments that I can give you so that you can recover from the losses as a creditor. So government would have to talk about all the things that it will do to encourage the participation in the debt restructuring process. What if I say no, as a creditor, I'm not going to participate? Then government can give me sticks. And what are those sticks? I can say, fine, I won't pay the debt today, I won't pay the debt tomorrow. If you don't accept, I won't pay. So government can implicitly or explicitly issue threats of non-payment. You must participate. Otherwise, there's nothing I can do about repayment. I can't pay you. Domestically, government can exploit laws to change the laws and commit you, whether you like it or not. Government can change the government paper and then extend the maturities, whether you like it or not. And that was what happened in Ghana. Government can also immune itself against national assets. In other words, government can protect national assets and say, look, yes, I have airport, I have toll, I have this, I have reserves, I have this. If you don't participate, don't think of claiming the airport. Don't think of coming to take over government asset. No, those assets are immune, so you can't do anything. So the third one, government can protect national assets against seizure. So no creditor can seize government property. So they are all immune and protected. Okay, so those are the stakes government can give. Or I can also issue new bonds and provide you with some ways of encouraging you to participate. And remember, the stakes are more coercive measures. They are like force measures that government adopt to encourage participation. And you will find even our last recent finance minister, Anta Mohamed, Anta, talking about the death such as being painful and apologizing. And he was proud to also mention that they had 97% participation. They used sticks, and they also used carrots. So those are the things that they use to, whether you like it or not, you participate. So they proudly, present themselves as one of the best in terms of debt restructuring, because they've encouraged 97% participation, which is fine. But it came as a result of the sticks that were being used to exert the local participation in our debt restructuring. Okay, now let's make progress. Now for the last one, what if yes, no matter what, some people will say we will not participate. And by saying you will not participate, despite all the sticks, despite all the all the carrots, we will not participate. This gives the problem of what is called the creditor holdout problem. So the creditor holdout problem represents a situation where the creditors refuse to participate in the government restructuring process. So it's like holding government at ransom. So you will find our grandfathers picketing at Ministry of Finance saying we don't want to be part of it. The former is it the Attorney General or who Sophia also saying, leading the charge, we won't participate, pensioner, we won't participate, whether you like it or not. Those were the creditor holdout problems. So in the event of creditor holdout problems during debt restructuring process, government will still be using the sticks and carrots to exert some form of participation in it. If that fails, then there is going to be a serious problem, and government would definitely have to default outrightly on that. Yes, and Danny, your hand is raised.
Okay, look, thanks so much for the opportunity. Just to ask, ever since we've been studying accounting economics, they may mention that government bonds and investment in bonds are risk-free. But in recent times, that happened, we didn't see such. Can you still tell us that it's still risk-free?
Yes, it is risk-free. It is risk-free because no matter what government will pay, even if it is taking government 100 years. So that is normally by being risk-free, we are saying that no matter how long it takes, you will still get your money from the government. That is why it is risk-free. Yeah.
Okay.
Even though recent evidence might suggest that yes, investing in government bonds is not risk-free. Yeah. But no matter what, you will still get your money from the government. That is why we are saying it is risk-free.
But we also need to understand that government could go to print more money to come and settle those treasury bills and bonds. Why didn't government go to print more cash?
No, yes, because if you print more money, it causes inflation, which exacerbates our current situation. Printing more money in the system increases the money supply, and you also have what is called higher volatility of money, the rate at which money changes hands. Okay, so once you have more money in the system, it creates inflation. Okay, because when you look at we didn't do it, we have the money supply curve and the rest and aggregate demand. Because once there's money, we all have money. So our overall aggregate demand will increase. It will shift to the right. And once it shifts to the right, from the demand and supply curves, price on the price axis will increasing the overall level of inflation. So printing money to pay debtors is not always the right problem, the right solution, because you solve one problem and create a bigger problem. Okay. So government.
Thank you so much for the credit explanation.
No problem. Yes, Nabil.
Yes, can a government go bankrupt?
Oh yes, government can go bankrupt. Yeah, government can go bankrupt. Yeah. Yeah, even though government will do all that, it cannot go bankrupt. Yeah, the government can go bankrupt if they have, for instance, if they are not able to mobilize enough domestic revenues, and no government, no country or international borrower would want to lend to the government, and they have very limited fiscal space domestically to raise revenue, it can go bankrupt. It can go bankrupt. For instance, in Ghana right now, if no one wants to lend to us, and domestically we are saying we won't pay levy, we will not pay anything, and government expenditure is there waiting for it to spend, government can definitely go bankrupt. So it may look for short-term income to pay current debts and to also finance some current expenditure, but that is not sustainable. Okay. So now the last one that I'm just speaking about is the creditor who had problems, a situation where creditors refuse to participate. And I think one key thing that also happened was I think in Argentina, between Argentina and their creditors, there was this big creditor holdout problem that happened sometime. So as a country, how do you avoid debt distress as a low-income country? Let's look at the recommendation. One, first, you need to actually re-anchor your fiscal policy through a very credible medium-term strategy. Yes, your expenditure and revenue should be very credible, and your medium-term strategy, okay, through a credible medium-term strategy. You need to know your revenue sources, your expenditure sources, and then re-anchor it through a very credible strategy of your expenditure, a very credible strategy of your revenue. You should also undertake, a comprehensive fiscal adjustments. Do extend the expenditure rationalization. You don't have to spend on boondoggles. By boondoggles, we are talking of projects that are government projects that have low value. So you need to do expenditure rationalization. You don't go and spend on social projects that will produce very little to the economy. You do not have to do like some people are saying government spending a lot on free senior high school. Government should reduce certain expenditure, whatever, to use the savings to do some extra thing that will benefit the economy. So government would have to do a lot of fiscal adjustments to be able to solve these debt challenges. Government should also mobilize more domestic revenue, okay? And by mobilizing domestic revenue doesn't always mean increasing taxes. You can leave taxes unchanged, encourage production, people will produce more, and then you get more revenue. Or you broaden the tax net. Those that do not pay tax, you bring them on board. I know government was trying to implement property rates for people to pay. And I remember 2 times they came to my house in Agric, the Tamari. I said I won't pay. I won't pay. They brought people from assembly to take. Is it my father says Kudin Castle or something Kudi, that land race or whatever. I said I won't pay. It was 50 cities. Government need to force me to pay. Otherwise, you and I won't pay. I'm sure some of you they came and you also refused to pay. So government need to mobilize a lot of domestic resources to be able to support those things. Okay. The fourth one is government to strengthen the budget institutions so that they can implement some fiscal plans. One way of doing it is to have what is called the fiscal rules, where they set rules on 4 key areas. 1, expenditure rules. 2, revenue rules. 3, your debt rules. And then the last one is the balanced budget rule. So government can can strengthen the budget institutions or the Ministry of Finance so that they can actually pin government to a very credible and more feasible expenditure path and the revenue path so that government do not overspend. In fact, Bank of Ghana also has a key role to play in this. So they should strengthen the budget and the budget institutions, including the central bank, so that they can actually put government in checks. One way of doing that is to implement the fiscal rules, where you have rules that government cannot break. You cannot go and borrow over a year. You cannot borrow more than maybe 5% of previous debts. So you set debt rules, or you set what expenditure rule. You cannot spend maybe 40% of your revenue. You have to give a maximum limit on your expenditure. Or you can also have what? The balanced budget rule, which is what? You always need to have a balanced budget. In other words, your revenue should be equal to your expenditure. Don't increase it. If you are increasing your expenditure, then make sure it is matched by higher revenue so that the budget will be what? Will be balanced. The budget will be balanced. Or you can also have a ceiling on the fiscal deficit. Maybe say 4% fiscal deficit. We don't have to go above 4%. So these institutions must be strengthened to do what? To keep government at checks. And with the implementation of the fiscal rule, it also comes with what? Fiscal council. So it is those fiscal councils that will keep checks on the extent to which government respects those four fiscal rules that I just mentioned about: the balanced budget rule, the debt rule, the expenditure rule, and the revenue rule. And last but not the least is government should have very strong and clear communication strategy. You can't keep people in darkness if you want to solve your debt problems. You see people picketing, protesting because government isn't forthcoming with information. We don't know what is happening. So the Minister of Finance, Bank of Ghana, and in fact, government should be very clear with regards to its communication strategy so that we are able to share in the true picture of the economy to be able to also support the government in achieving debt sustainability. Without this, government will still continue to be in debt crisis. So it is important that in addition to looking at the economic side of things in solving your debt challenges, you should also build a very strong and clear communication strategy and transparency strategy so that people are able to relate to the true situation and also share the responsibility of helping you to grow out of what? The debt challenges. I think we've done a lot, and I would thank you so much for the opportunity. Now, in terms of the exams, yes, all the assignment questions are coming. We also solved some questions that I mentioned would also be coming. We use the Lagrangian multiplier, which will be coming. We also solved the question on what will be the production function, the alpha beta thing, if the input prices are the same. Okay, that will also be coming. Which one will be coming? Yes, what we did, the budget and the reading of budget credibility will also be coming in the exam. Like the assignment question will be coming in the exams. And the demand and supply, where you find the equilibrium prices for two goods. You have demand and supply functions for good one, demand and supply function for good two. This will also be coming in the exam. And I will also ask you, how does restructuring process, how is restructuring done, debt restructuring done? So I expect you to talk about what the 5 steps that I mentioned, this 5 steps. So you should know these 5 steps. This one, the restructuring process. You should know the restructuring process. And I can also ask you a question on what is the name, the 6 and the what, and the carrot. So in the presence of what is the name? In the presence of creditor holdout problem, what should the government do to encourage participation? So you have to list the 6, the carrots, and then the what? The sticks. So what should government do to elicit participation in debt restructuring process in the presence of what? Creditor holdout problem. So government can look at what? Carrots, and then what? And sticks. And we talk about it here. So you just have to mention what is the name? Government can use cash, maybe contractual improvement, okay, or credit enhancement, or value recovery instrument. So I can ask you to list just 2 carrots and 2 sticks. So we have the carrots, and we also have what? The sticks. Explicit and implicit what? Threat of non-payment or using local laws, or you can protect or immune the national assets against seizure. So if a question is going to come under today's lecture, like I mentioned, 1 is the assignment question, which is number 2, which we did. There's going to be a question on the restructuring process. How is restructuring done? How did Ghana go through the restructuring? And recently we just concluded the restructuring. We did the restructuring. Okay. Having known the 5 stages to restructuring, the another one that you should also know is what are sticks and what are carrots in the restructuring process. So I will ask you to just state 2 carrots and 2 sticks in the restructuring process. So we have the sticks here, and we also have the carrots here. Any question? This is our last lecture, so you can ask all your questions. You can ask all your questions.
Hello, Prof.
Yes, I can hear you.
Yeah, I wanted to find out in the examination, how many questions should we be expecting?
Normally, I just bring 5, answer 4.
No compulsory limitation to 1.
Oh, normally the compulsory are even 3. Then you have 1 option.
Wow.
So if you're answering 4 questions, 3 will be compulsory. Or I may give 5 questions, then I'll ask you to answer 3, but 1 will be compulsory. In fact, you don't need to worry about the comp. I can say 1 question is compulsory, and I'll do A and I'll do B, and they will have babies.
Oh, no grandchildren.
They will have babies and grandchildren. That's what I'm saying. They will have them. They will have them. So just look at the. Let me stop sharing and share this for you to see. Okay. Can you see my screen?
Yes, sir.
No, sir. Okay. No, this is the assignment. Okay, let me just download. Okay, for instance, you have all these past questions. So this last year. So just look at it. So here, answer all questions in section A. So you have section A, you have 1 question here, and look at how I've loaded it with grandchildren. So A is the first child, also having 4 grandchildren. B also having 3 grandchildren. And then question 2 is also part of what question 1. You have to do all these things. So you have this. And then section B, answer any 2 questions.
Okay.
So they have 3. So you have this one, you have this one, you also have this one. You also have this one. Okay. So the assignment, remember the assignment question is basically talking about what? The labor market. So you are not, where is the assignment? You are not required. Where is the assignment? Okay, good. So here, remember I've always been mentioning this. At equilibrium, price from the supply side is the same as price from where? From the demand side.
Yes.
Which means that here too, at equilibrium, the wage rate from the demand side is the same as wage rate from the what? From the supply side. Is that not it? So if I ask you to, and the quantity demanded quantity demanded is the same thing as what? Quantity supply. So in place of this Q here, QDL, QSL, I'll just put Q and equate the 2 because it's the same. If you equate the 2, is because it's the same. So which means that at equilibrium, my wage from the demand side is the same as the wage from the supply side.
Yes,
and what is the wage? And then the quantity demanded from the labor is also equal to what? Quantity supplied from the labor, which is the same thing as what? 1 quantity. We've done this. What is the demand? What is the demand function? Minus 4Q plus 120.
Yeah.
Minus 4Q plus 120. Is that not it?
Yeah,
that is the wage rate from this side. And the other side is what? 1/3 Q SL plus 29.
Yeah.
Plus 29. So this is just simple. At equilibrium, the wage rates are the same.
Yeah.
The wage rates are the same. So it's just going to be what? Minus 4
D
Q, this one, plus 120 is equal to what? 1/3 this one plus what? 29. And like I said, also at equilibrium, QDL is equal to what? QSL, which is equal to what? Q, the same quantity that will be supplied is the same quantity that will be demanded. Is that not it? So we can rewrite this one as this one plus 120 is equal to 1/3 Q plus what? 29.
Yeah.
If you don't like fractions, please eliminate it from the beginning before you start.
You multiply through.
You multiply through, because once you don't
Yeah,
do it
yeah.
and confuse yourself, you will get zero. You get zero. So here you multiply here by 3, here by 3, here by 3, here by 3. If you also want, just take your calculator, 1/3, you get 0.33. And then use 0.33 and work throughout. You'll get the same answer. So this will cancel this. This times this, you are going to get what? Minus 12Q. Is that not it?
That's it.
Plus 360 is equal
360.
to Q plus this times this. What will you get? 3 times 29.
87.
87.
87.
Okay. So 87. So here will be what? Minus 12Q. You can let this one. Okay.
Minus.
If we want, we just let this one to remain. Oh, who is that? You see, we are solving and someone is making noise. When the person fails, then the person will come and be talking. Okay. So here we can let this one remain. So we will have what? 360. Is that not it? This one will cross minus 87.
Yeah.
Here will be Q. This will stand alone. This one will cross. It will be what?
Minus. Yeah, plus. Plus.
So 360 minus 87 will give you what?
273.
It's equal to this.
13Q.
13. So here Q will be what?
21.
Will be what? 21.
21.
So this is the what? Equilibrium quantity, and then what? Equilibrium what? Equilibrium quantity supplied and quantity what? Demanded. Is that not it?
Yes, sir.
So you then find the price, and we know the price, or you then find the wage rate, and we know the wage rate. You can find it from here.
Yes, sir.
You can find it from there. So which is what? The wage rate is equal to minus 4 QDL plus what? Plus 120. And we said at equilibrium, QDL is equal to what? QSL, which is equal to Q. So this Q that we are looking at is this one.
21.
So we are going to have this one is equal to minus 421 plus what? 120. So this will be, this one is equal to minus 80 what?
4.
Plus what? 120. What will you get?
36.
36. That's good. So this is the wage rate, 36 cities. If you are illustrating it in demand and supply curve, this is what you will get. This is what? The demand. This will be what? The supply. Here will be what? Remember, this is quantity. This is what?
21.
The wage rate. So here will be 21. And
21.
here it will be what?
36.
36. So that is it. So that is the first part. So that is determine the equivalent wage rate and number of laborers to be employed. Remember, the laborers are in, I've said they are in thousands of cities, thousands. As you can see, the number of laborers is expressed in thousands. So here will be what? Here will be what? Where is it? Here will be what? 21,000. So here they are also expressed in thousands. Are we together?
Yes, sir.
Okay, good. So we have the second part. The second part is saying the blah, 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 blah. The second part is saying,
Increased by 13.
Increased by what?
13.
By 13. That was good. So remember, in this particular case, we are just going to do what? To add it to where?
The price.
Old one.
Yeah, 36. We add it to 36.
We add it to the 36.
Yes.
Yes, sir.
So what will be the equivalent labor?
49.
And then
14.
So you get
49.
and here alternatively, what you can also just do is to do what? You add it. Remember, you see this as price. So here we are increasing the wage rates, okay, by what? By 13. So if it is increased by 13, you have to calculate the new equilibrium labor and then what? Supply after the imposition of the what? Of the minimum what? Wage. After the imposition
Yes.
of the minimum wage. Yes. So what will you do? Will you add it to the supply and then or you add it to the demand? Two ways. Like I said, you can get a minimum wage. Okay. But in this particular case, what will be the equilibrium quantity supplied and then quantity demanded? We did this. You add it to either this or this. So which one will you add it to?
You add it to the supply.
We've done this one. So you just add it here and proceed. You will get the same answer. So you can illustrate it diagrammatically. In that case, when you do it diagrammatically, you will find the new supply curve here. Will supply increase or fall?
It will,
It will increase
It will
because people are now going to do what?
So
People
supply
now
will
offer
increase.
Excellent. So you will have more. You will have more what? Supply. Is that not it?
Yes, sir.
You will have more supply, and what will happen?
there will be shortage.
There will be shortage, and what will happen? Remember unemployment issues.
Will come up.
Okay, so I can also ask you to estimate the number of unemployment and the rest. Okay, the number of unemployment and the rest. Okay, so that is it. Any question? Any question? Any question? Okay. So in the absence of any questions, I wish you all the best, and I will share the PowerPoint slides and what is the name? The recordings with you. And please, the folder that I shared, all the materials are there. The Google Drive, and they are always in the shared in our WhatsApp platform. So I will also just share this ones. I will update the Google Drive and also share with you, and also share with you. Any question? So this is our last lecture. Any question? Lecture 8.
So, Doc, can we contact you privately if we have any challenges?
No.
You assign?
I may
Then in
or may
that
not.
you may be busy. But what about your TA? Can you tell if we are confronting with any other issue? Can TA be someone available we can contact either through phone or one-on-one? Is he ready to do that?
Or if you have something, just post it on the group. I will read and provide feedback.
Okay.
But, individual, I cannot, respond to all the things that you guys will be asking me because I receive a lot of messages. Okay. Yes, and then you have, is it an old hand?
No, this is a new hand.
Okay, please go ahead.
Okay, so mine just have to do with commendation to you. In fact, throughout your lecture, we have enjoyed it. It has been seamless, even though you are far away from us. And so just to appreciate you and the kind of sacrifice and studies that you have done to have shown us, we really do appreciate. And we also encourage you to keep it up. Elisa, who fall from a high equity will not praise himself or will praise himself, no one does. And so there's a need for us to commend you. We appreciate the time, and all your session has been so insightful. Thank you so much.
Okay, thank you. I'm grateful, Adan. I'm grateful. Thank you.
On my part, today was exceptional. The rest I was so much drawn in, but today is exceptional.
So because we didn't do calculations or what? Well, because we had debt restructuring. Yes, Francisco.
Yes. Today I really understand.
Doc,
the trajectory of Ghana.
Mm.
Looking at the budget and then the explanation and the calculation towards so much understanding, and I do appreciate particularly today.
Thank you.
And also to add to what they just said, Doc.
Hello, Doc.
Hello.
Yes, go ahead, Francisca.
The production theory, the beta and the alpha part is the most difficult part for now. That is where we're having issues for now.
But doctor said that one will not be coming in the exams.
No, I didn't say that too. Don't miss
If Doc will bring it but not make it compulsory, it will be better.
That should be compulsory.
No, it will be compulsory. Let me show you something. Yes, Francisco, go ahead.
Doc, please, can you please resend this in the notes and then your slides?
I will share the Google Drive for you. And it contains everything, the notes, the slides, everything. But today's lecture, I will send it immediately after this.
Okay, sir.
I want to show you this. Excellent. You see this question? Have you seen it? Do you remember this?
Yes.
Douglas Pro.
Yes.
I'm bringing it.
Douglas.
So and we've solved this one, which is here. I know someone is not happy.
Serious.
In fact.
So this is coming. So you have to know this, and this is the final. This is the final answer.
Okay, you make some of us go to toilet.
This will also come. This will also come.
Sir, I hope it will be part of the slide you are going to share with us.
Oh, I've already shared everything. This is lecture 6. This is lecture 6.
Some of us joined late.
Like I mentioned, they are all in that folder that I shared. So you will see them there.
Okay, sir.
But please don't study in isolation. Contact your friends. They may have all the materials. You have lecture 1, lecture 2, lecture 3, lecture 4, lecture 5, lecture 6.
Okay, sir.
This question is also coming. This one. Is it? Yes, I think this one. Okay. Anyway, yes, Francisca, please go ahead. Yes, Francisca. Your hand is raised.
I think that was the initial hand raise.
No, I think she's struggling to speak. Francisca.
Yes, Doc.
Your hand is raised.
Yes, I said, please resend this in the slides.
Oh,
it looked like where they were putting it, the YouTube. When you want to download it, you have difficulties.
Difficulties in downloading slides?
Yes, and at the same time, they said it's as expired or something else.
No, yeah.
I've been reading from there straight away, but when you want to download it, it doesn't give you access to do that.
Then it's about your app.
Okay, so I also
you can't be using your phone to download
stuff. No, my laptop. It's my laptop. Not my phone.
Doc, there was a time I also wanted to download a slide, and it's telling me it has expired through the link you shared.
Which means that you wanted to access it after 7 days.
Exactly, that was it.
So if it expires, you can't get it. You can only get it in the Google shared folder. So after this class, I will only share my course where you can find only business economics course materials.
Exactly.
So please go there, download, and you will find everything there.
No, this is a very unfortunate question to ask. You are far away from us. So if one should have a defer in economics, how are you arranging for the person to reset?
Oh no, it's reset. You deal with the university, not the lecturer. You have a lot
Okay.
of, in fact, when you are writing, you will find people joining you, those that failed last year. So if you deal with the university, my presence there does not matter. Am I not teaching you?
Okay.
And I give you all the materials. Yeah. So if you are deferring, you just deal with the university. You don't deal with the lecture. I don't organize different exams for students. I don't do it.
Okay.
Any questions?
Okay. Thank you. No question.